Hello guys and girls, welcome back to my YouTube video. Now a lot of people are having trouble being profitable in trading, and that is mainly due to the way they are doing the analysis. So in today's video I will show you how you should do analysis in order for you to be profitable. I will go from the very start on how to identify profitable trades to how to get your entry conferences. So if you are having trouble in day trading strategies or day trading analysis, then this video is right for you. So the first thing is we have to start doing analysis. If you're a day trader, you should start doing analysis on the 4-hour time frame. And if you have a tablet or a computer, that will be better for you because you'll get a very wider picture on how the market behaves. Now this is volatility 75 index, and currently we are on the 4-hour time frame. So by just naked eyes, we can see that this market is heading to the downside. Hence this market on volatility 75 index is on a downtrend. Now we know how the market moves in a downtrend. The market always moves in series of lower lows and lower highs. Now a lot of people, when they come to the markets, they are having difficulties to understand what makes a thing to be a low high or a higher high or a lower high. For example, let me draw a simple illustration right here for you to understand. For example, if this is the downtrend market moving this way, this will be the lower low, this will be the lower high. After the break of the structure, it is only when that we are forming a new lower low. Once the market comes right here, let's say, to form a new lower high, and comes again right here to form another point right here to this point right here, before coming to this down point right here, this level right here, this point right here, it cannot be termed to be as a lower low. Why? Because simply the market did not yet break this structure. So the principles of for a downtrend market, for example, a lower low is formed only after the break of structure. Do you get my point? So let me get to this chart right here, and we identify on how you should do your analysis if you are starting to day trade today. So we have already identified first conference that this market is on a downtrend. And what should we do once the market is on a downtrend? Simple. Put it in the back of your head that we should always sell when the market is on a downtrend and buy when the market is on an uptrend. Do not go against that at all. Now we can see right here that this market currently is trying to retest to this broken structural level or the previous lower low of this downtrend movement, and we can see the market is coming to this level right here. So unless the market breaks this structure, we can say, although that volatility 75 index is on a downtrend right now, it is still on a corrective phase, unless otherwise it's break this structure. So what to do in order to be safe? In order to be safe is you should always be patient. You should only enter your trade unless the market comes to as high to as this level first before even thinking of taking your trades. So most people will go and open their MetaTrader apps being impatient, and they will only see this bearish break and they will say, okay, the market is already praying out, let me enter random trades right here, and they will press a lot of random trades without knowing that you cannot enter these trades unless otherwise there is a break of structure. So right now we aren't anticipating the market to come to this level first before we are actually selling, but the market already came. So in case the market never fails or always fails to come back to this level right here, what you should do is you should wait until there is a break of structure, and after there is a break of structure, it is when you can enter the market after the formation of any continuation pattern before entering sell trades or the formation of just a retest. Sometimes the market will break this structure and come to a retest before actually selling, like the way it did right here. It broke this structure, it came back to here, form some kind of a reversal pattern or an evening star before actually sold for a little bit. So let us go first to the 1 hour time frame and see how the market is behaving on this corrective phase. You can see even on the 1 hour time frame, the market did form some kind of weak rejections when it came to this level. Although this is the kind of common occurrence that may occur, the market may sometimes retest this way and may undershoot. This is called undershoot. The market may not come, the market may sometimes come to retest this way. Let me show you this scenario first. The market sometimes may come to retest this level, taking some people's stop losses before actually selling. This is one of the way on how the market may decide to move. And sometimes the market may come and undershoot like this, the way it occurred right here, before actually selling. And sometimes the market may perfectly come to this zone right here before actually starting to sell. So how should you enter the markets in order for you to avoid being manipulated by the market moves? First of all is you should wait for multiple weak rejections. So you may find that market, when it is testing to this level, you'll get these multiple weak rejections. Or if there's no multiple weak rejections, then just think of the candlesticks, the reversal candlesticks. I personally prefer a doji candlestick, and on the 4 hour time frame the doji candlestick did appear, but I personally prefer to a doji candlestick as a reversal candlestick, and I personally use these weak rejections as a conference when the market comes to reaches to the broken structure level as an entry conferences also. I hope I'm clear on that part right here. Let me go to another pair so that you can get either picture or other concepts on how you should do your analysis. Now this is volatility 50 index and we are on the 1 hour time frame. So what we do is we go first to the 4 hour time frame so that we get a general picture of this market, to know where it came from and what made this market to be on an uptrend right now. So on the 4 hour time frame, it can be seen clearly that this market is a result of this uptrend market movement. Now we can see this market is just coming from breaking this higher time frame level right here. So this market is breaking this level right here, so we can say this market is on an uptrend movement today. So what we should do is we should just be careful on this level that the market did break. As you can see, when the market was making this impulsive phase or this uptrend movement, forming series of higher highs and higher lows, it's after every break of structure, the market did come to retest to this previous broken levels right here. So what you should do is you should wait for the market to break this previous higher high that the market did form right here, this previous higher high. So after the market break this, the market right now, you can see it is having trouble penetrating this level. You can see the market is, this candlestick is still running, and currently we are on this weak rejection. So what you should do on volatility 25 index, volatility 50 index, for this case is you should wait until there is a break of structure, and after the break of structure you should be patient until there is a break of structure. Do not say, okay, this market is on a resistance level, let me enter onto this sell trade, because the market is on a resistance and we know we should always sell on a resistance. Do not trade that way. Just know that if the market is generally on an uptrend movement, what we should do is we should only enter buy trades. So in order to be safe, is either you should wait for the market to come and retest to this level right here before actually buying, or you should wait for the break of structure, and after the break of structure sometimes the market may form a continuation pattern before going to the uptrend direction, or it may retest this broken level or before buying to this market, or sometimes the market may come to as low as this previous higher low right here before actually deciding to buy. Guys and girls, only those simple concepts can make you a lot of money. I'm using those concepts, although it requires a very high level of patience and discipline for you to succeed. So sometimes, most of the day, the day may pass without me having no entry at all, because these sometimes it takes time to form. You can see this is the 4-hour time frame, and it took almost 16 hours for the market to form these 4-hour candlesticks right here. So it requires high level of patience. If you are a scalper, then this is not for you, but if you are a day trader, this is for you, because it is always a guarantee for you to always win using this strategy, because the market moves this way. The market always moves this way. Before Christ, I can say the market has always been moving this way, higher highs and higher lows. Just be patient and wait for the market to retest to the previous broken levels, and on that way you may succeed. Now guys and girls, see you in the next video. Bye bye.